Welcome to the Probate Nation. My name is Richard Ruddy. Whether you're caring for an elderly loved one as a court-appointed conservator or guardian, or as an agent named in an advanced medical directive or financial power of attorney, or just helping out without any of those authorities, your primary goal in each instance is to provide your loved one with the best care possible as they age. Often that care involves hiring caregivers in their home, or it may involve moving them to an assisted living facility. Getting good care is important. Paying for it is often the challenge. Your loved one may own a life insurance policy, often purchased years ago, but no longer need it. You have no doubt seen those ads on TV about selling a life insurance policy. That sale is called a life settlement, and it sounds like something worth investigating. Tonight we will take a look under the hood, if you will, at what are life settlements, how do they work, what type of policy works best if you want to sell it, and much more. Our guests are two professionals with extensive experience in the life settlement industry. They will serve as our guides as we explore this financing option for all who may be traveling on the Virginia Living Probate train. Our first guest has worked in life insurance and financial services industry for 38 years. He received a physician assistance degree from Hahnemann Medical School in Philadelphia, and then worked in family and emergency medicine before joining the Underwriters Group in 1981. In 2005, he founded Agency One, a specialty life insurance brokerage firm in Rockville, where he heads all underwriting operations, which include life insurance and life settlement negotiations. Our second guest is the CEO of Lighthouse Life Solutions, LLC, a life settlement company. He received his law degree from the University of Buffalo School of Law in 1993 and has worked in the life settlement industry for more than 15 years, including for Coventry First and GWG Life. He is a former board member and vice chairman of the Life Insurance Settlement Association. Please welcome Dennis Bartos and Michael Friedman. Man, we got a lot of knowledge sitting here next to my right. You guys really do know your stuff.
Thank you.
Thank you guys for coming and being here today. You know, Dennis, we first started this conversation a while back as we started to prepare for this show. Tell me about the different types of life insurance, the different types of life insurance that are available.
Well, the four most common types of life insurance that most people are buying today are basic term insurance, 10-year term, 15-year term, 20-year term. Then there's traditional whole life, which is a whole life dividend producing contract sold by mutual companies. Mm-hmm. There is a universal life, which is a hybrid between a term insurance policy, which has no value in it, or the traditional whole life, which generates a lot of cash value. The hybrid policy is a little bit different, the universal life chassis. And then there's group term. Group term is what you know of that you have as an employee benefit, sits on your health insurance plan at work usually.
Okay. Why do people buy life insurance?
To protect against loss, to protect their loved ones, to protect their businesses, buy-sell insurance between two business partners, stock redemption protection at work, the estates, to guard against the liquidity needs of the estate, the taxation issues, mm-hmm. And to pass things on to their next generation.
So does there come a time, though, when that life insurance, because you're talking about trying to fund a particular need, so we're basically transferring some risk to an insurance company to take care of a particular need. So at some point in time, does that need go away that would cost
Absolutely.
people?
If you reverse engineer it, all the reasons why you bought life insurance in the first place, to protect my loved ones when I'm 30 years old. I have 2 kids and I want to take care of them. Mm-hmm. To protect the college education going forward, to protect the income loss in the event that I die and I lose my salary. Mm-hmm. That protects the family. The buy-sell insurance and the corporate needs are to protect the corporation. Sure. And to let it live on. Okay.
Those are all important things. As you start to, they start to go away.
And as those situations change,
mm-hmm.
My kids have grown, my mortgage is paid, I'm 65 years old, I'm retired from my business, I don't have any need for the insurance any longer.
So what if your policy becomes unnecessary? Okay, some people just ignore it and they keep paying. Okay, or they let the policy, or they let it lapse. But what are your options? What are people's options as far as dealing with the policy?
Well, you have many options. term insurance policy you could certainly let it lapse if you wanted to, not pay the premiums. You can sometimes lower the death benefit in a term insurance policy. In a whole life contract, you can change the premium structure, you can lower the death benefit, borrow from the contract itself. Universal life gives you flexibility, change the premium structure, change the death benefit maturity age, from age 100, say, to age 80. Group term, you could convert if you wanted to.
And one of the options, of course, is to take that policy in certain situations and sell it.
Absolutely.
And
Life settlement is certainly an option nowadays.
That's the life settlement thing we're going to talk about next. So, Michael, what is a life settlement?
Well, a life settlement is the ability for a life insurance policy owner to sell rather than surrender or lapse their life insurance policy. Life settlement is the market value of the policy through a transaction in which they sell the policy to a company like ours. In most parts of the country, it's a well-regulated transaction, and it pays policy owners a significantly more than the cash value in the policy. There are studies out that have demonstrated 4 times the amount greater than cash value, or as much as 10 or 11 times cash value.
Now, and we talked about we can do this. So, can a life insurance policy legally be sold or liquidated or transferred to somebody else?
Yes, in a couple of different ways. It's important to know that a life insurance policy is considered property, just like your home or your car. And if you don't want to stay in your home any longer, or can't afford to stay in your home any longer, you don't just give it back to the developer. You don't just give your car back to the dealer and say, what do you want to pay for it? You put it on the market. And so a life insurance policy is considered property. In 1911, the Supreme Court of the United States established it as such. And also, in every single contract of insurance, there's a right of assignment. And that assignment right includes the assignment for sale.
Okay. So are life settlements available to every policyholder? Or another way, who are good candidates for a life settlement?
Right, that's a good question, because while all policies have this ability to be sold, there are a number of factors that really play into whether or not that policy has a market value. As to the type of policies that are often seen in the life settlement market, the vast majority are the ones that Dennis talked about, universal life, there's very flexible types of policies, and the term life policies that have the ability to be converted to a permanent form of insurance, to a universal life policy in terms of the types. And then there's factors such as age and health of the insured, whose life is the insured life under the policy.
Okay. Well, let's talk a little bit about life settlement economics. So who actually buys policies?
Well, we're going to talk about this, I'm sure, more, but it is a very well-regulated transaction, and the state laws, state insurance laws that govern these transactions require that there be a licensed buyer, a company like ours that has a license issued by the state in which the policy owner lives. So that's who buys them. But behind companies like ours are, for the most part, institutional investors, large investors, including insurance companies, that are the buyers and the aggregators of those policies. Buying a single policy is a bit risky. How long is one person going to live? But if you do that as a business and you're buying hundreds and indeed thousands of life insurance policies, you can manage the risk better. So large investors are behind the actual licensed buyers in most instances.
Okay. Okay. I know we sort of jumped ahead a little bit, but part of this whole process began with the whole viatical settlement process.
Yes.
I know we don't want to spend too much time on that, but what's the difference between a viatical settlement and a life settlement?
Well, viatical settlements really became known throughout the United States in the mid to late 80s and into the 90s as a way for primarily men who had been diagnosed with AIDS or HIV, who were dying and had very little resources of their own except for their life insurance policy. And what began as sort of a cottage industry, if you will, of friends and family gathering up resources to buy that life insurance policy to give that individual resources at the end of their life. That's where the viatical market came from, and life settlements is really an outgrowth of that. Basically the same transaction, but it's not somebody who's necessarily diagnosed as terminally ill or dying, but somebody who is of a certain age and certain health that they no longer need or can afford the policy, and there's a market value for it.
Okay. Well, Dennis, let's come back and talk. I know Michael talked a little bit about that, but I want you to get into that. What are the types of insurance policies that are best suited for these types of life settlements?
Universal life policies, beginning at about age 65, become flexible, premium enough that they can become valuable to a market buyer for a policy like that. When the life insurance policy is impaired risk, someone has had a health status change. You bought the policy at age 40, you're a preferred risk at age 40, and suddenly you've had a heart attack or diabetes or something happens that changes your health, okay? As your life expectancy shortens, if you will, you become a more valuable commodity to this particular pool of investors.
Okay, so that's the important.
So age 65 is probably your benchmark age to start saying there's a settlement value for a policy. But I've got policies coming across my desk on much younger people who have had a dramatic change in health. So it's not something that...
So those two factors really work together.
Absolutely.
So you can lower that age if someone's been diagnosed and unfortunately had a bad diagnosis. Talk a little bit about convertible term, though. How does that play out, and where's the crossover where that actually makes sense?
This is one of the things that is probably missed by most fiduciaries, most CFOs at corporations, where term insurance policies are in force. You buy a 30-year term insurance policy at age 40, it's not going to mature, so to speak, until age 70, 30 years hence. There's a conversion privilege inside that policy that allows you to convert it from a term insurance policy to a permanent life insurance policy. The life settlement community doesn't really like to have term insurance on their books. They like conversion products. They like guarantees. They like to have policies that have fixed premiums going to maturity. Term insurance policies don't generally do that. So a convertible term policy has more value than a term insurance policy that doesn't.
Okay. Well, that's good to know. We talked a little bit about so what makes a policy valuable to an investor? What are some of those factors? And I think you touched on a little bit of that, Michael. Future premiums, cash flow, those are all different things that come into play as you begin to evaluate a policy, determine whether it's valuable enough to invest in. Convertible feature, we talked a little bit about that. If there's loans outstanding, I think those are things we've talked a little bit about before. And I guess the ages we're looking at are generally in the 65 plus age, typically is where the policies might be more attractive to someone to purchase. Is that right?
Yes, I think the critical factors are the age and health of the insured and the future premiums. And so it's considered a financial underwriting and a medical underwriting sort of mixed together in order for investors to understand what the value, today's market value of that life insurance policy would be. And as you pointed out, you're going to look for loans against the policy, liens against the policy. The policy could have been the part of a divorce settlement that would require the policy to stay in force and not be transferred. And so there's due diligence that has to be done on the policy seller side, but also on the buyer side to make sure that there's clean and quiet title and that policy can be transferred. And all those things come together to create an offer to purchase, which is, as I pointed out, is significantly greater than cash value, and provides the resources for retirement and other needs that they have at the time.
Sure, and of course, figuring out somebody's health, and where they are in that sort of, mortality table. I know we prepared for the show with Michael Pisano from Pisano Associates, a very nice gentleman who actually does evaluation work. But tell us a little bit about maybe Dennis, you know as much about this as anybody as well. What are we looking for from those medical folks who evaluate? What kind of report are we looking for them to provide us to help us figure out whether the health matches up with the age and the policy?
Well, you mentioned Fasano, who I think is probably the best in the country at what they do. This is actuarial medicine is what we're talking about here.
Okay.
You know, and a lot of people think that a life expectancy report is something that you do on someone and it says your life expectancy is 177 months and oh my God, you're going to die at 177 months. That's just not the case, okay? It's an actuarial mean or an actuarial average of a group of people, perhaps 1,000 population group that has had bypass surgery or diabetes at age 75 and blah, blah, blah. The medical records are all read through by the medical staff at Fasano, and they'll put a number on this case. What does this impairment do relative to the life expectancy of a normal standard risk individual? Okay, and then they calculate the mean. And then the money guys come into the game and they do the actuarial analysis on that. And they say, how much premium is it going to cost me to pay for this policy to the mean mortality of the life expectancy report? So the life expectancy report is the foundation for the pricing of a life settlement contract.
So it's important for people to know too, then, you know, there is a process. So let's talk a little bit about that. You know, the process is they reach out and talk to a professional like yourself, Dennis, or Michael, and they provide certain information. Generally, you know, that gatekeeper level, you know, you can begin to tell whether this is something that might kind of make sense given what you know. But the big thing is once you get past the numbers, it's the medical evaluation that really is what makes the thing work. Is that correct?
That's correct. Okay,
Yeah.
but it's important if you have a potential life policy that is no longer needed for whatever reason, you should engage the services of a licensed life insurance settlement broker. They're under a fiduciary rule that protects the owner of the policy. They have to serve the owner of the policy. And much like you have an appraisal on a house, you have a real estate agent, the performance factor is what's important here. The life settlement broker doesn't get paid. He shouldn't be paid. You shouldn't pay him a fee up front to do this kind of analysis. It's a performance factor. He gets paid when he succeeds in doing what he's supposed to do. And that's provide you with a settlement option that you'll accept.
Okay, that's important for folks
Absolutely.
to know. Let's talk a little bit about forms of life settlement, because it seems like there's lots of different options. Does a policy owner have to sell their entire policy?
Well, it's a good question. It does depend to some extent on who the buyer is, as well as some of the state laws and regulations governing those types of transactions. But of course, somebody can sell their entire policy and get a lump sum cash. An alternative would be to sell just a portion of that policy and get some cash and keep the rest. But the benefit of that is that there's no ongoing premium payments. Basically, they're just getting rid of the premium and keeping the insurance on a portion of that. Mm-hmm. And then there's obviously an ability to just do that and not get any cash. Just do that as well. And then also, in some instances, there's something called a scheduled retained benefit, where the amount of death benefit protection will go down every time the new owner pays premiums on that policy. So somebody who is kind of doesn't have a clear sense of their health and may need some death benefit protection now, but they'll take the risk, if you will, over time of losing more and more of that benefit, and more goes to the investor.
There's a lot of options.
Okay. Well, I think it's good. And Dennis, is there a fee paid to the brokers when we actually go to closing on these life settlements?
When you go to closing, yes. Okay, and it's fully disclosed. It's the licensing requirements of the states. Most of them require full disclosure, but certainly you should ask for full disclosure if you're going to be involved in a life settlement.
And are the proceeds taxable that you receive in a life settlement?
I'd ask counsel that.
Counsel?
Yes, there's a very clear pathway to understanding the taxes. We try to not give that advice out individually. Yeah, that's the most wise way to go. But yes, there's a taxation of the amount over the premiums paid, and in the form of income, and then there's a capital gains calculation as well.
Okay. And can creditors attach a life settlement?
Yes, it's important to know that the proceeds can have several effects, including claims of creditors, Could be a loss of government benefits. Somebody gets a windfall by selling their life insurance policy. They need to be aware of that.
Okay, that's important to know. Dennis, talk a little bit about the responsibilities of professional advisors and conservators. What are some of the important considerations that advisors and conservators need to keep in mind when they're looking at dealing with a life insurance policy and possibly trying to figure out how they can dispose of that because it's becoming too costly to maintain?
They should always be dealing with a licensed life insurance broker, life settlement broker in the transaction. They should always demand a life settlement package that is tantamount to a mortgage in paperwork. And it's actually a better question for Michael to answer because he's more in the compliance side of this.
Okay. But well, Michael, let me ask you this. How can people be misled? I mean, can people actually pose themselves to be able to handle a life settlement when they're not licensed to do that?
Well, fortunately, as I said, the laws throughout the country at the state level really do provide extensive consumer protections so that you're dealing with a licensed broker, as Dennis pointed out, or a licensed buyer in the case of companies like ours. Mm-hmm. So there is that kind of protection. So anybody who's dealing with a potential life settlement should be able to look online. Most insurance departments post that online of who the licensees are, or they should ask who they're dealing with. Are you licensed?
Okay, well that's important to know. Go ahead. Well, let's talk about some of the common misunderstandings. I think it's something that Mike, what are some of those common misunderstandings that people have about the life settlement process or life settlements in general?
I think that one of the biggest ones is that this is a dirty or gross or even an unregulated business, a wild west of business, and you're selling your life insurance policy. But in fact, it's an asset that you've created with the premium payments that you've made. Mm-hmm. And it is a highly and well-regulated transaction. As a matter of fact, state insurance departments collect all their consumer complaint information and bring them to the National Association of Insurance Commissioners. And over the last 4 years, there's been 2 consumer complaints reported throughout the whole country involving life settlement. So those consumer protection laws really do work, and consumers are getting the value in a transparent and well-regulated transaction. So it's the exact opposite of what people think.
Well, that's good to know. What does the future hold for life settlements then, given you're on the leading edge of that industry?
Well, I think we're all looking at a looming retirement crisis in this country. And people have resources in their life insurance policy they don't know is something of value. So I think the real future of life settlements is making sure more people know about it. And echoing what Dennis said, you should deal with a licensed professional, whether that's a life settlement broker or an attorney or a CPA, whoever is looking at your assets and helping advise somebody about their assets. They should be looking at maximizing the value of this asset. That would open up the market, and more people would have resources in retirement that they're lacking today.
And so as we go to sort of final closing comments, I'd ask each of you to consider, how you deal with people who are approaching you with a power of attorney or as a conservator who are trying to get this particular policy sold because they think it's what they need to do for their loved one. If there's any special issues that you run into when you have that type of presentation. So,
Michael's an attorney, so he can answer that one.
Okay.
Well, I'd say that it does happen quite often that somebody has a power of attorney governing their assets and their decision making. That has to be properly executed, either voluntarily while the person is still capable, or there needs to be court involvement, and we have to document all that. So it is important. But that advisor or that person does have a responsibility to act in their beneficiary's best interest. And
of course.
To do so involves looking at this asset like what it really is, which is a piece of property.
Sure. Dennis, we're going to go to some final comments you want to make, some thoughts or suggestions you want to pass along to folks as we sort of bring them to the end of our program here. Anything
I just
you
want to emphasize what Michael was saying, that a life insurance policy is truly an asset. Okay? Whether it's a convertible term insurance policy, an existing universal life, even a traditional whole life policy, These are assets that have real value. And for a conservator or an insured or an attorney or a CPA or the CFO of a company to simply say, we don't need this insurance any longer, let's just lapse the premium or we'll surrender it for the cash surrender value, that's not the right thing to do. Okay? As a fiduciary looking at maintaining those assets of the owner, you should absolutely price that policy. You have to appraise that asset before you liquidate that asset. And the way to do that is to get with a life settlement broker, a licensed life settlement broker, and get a life appraisal report, a life expectancy analysis, and get a life insurance settlement provider involved in the transaction and negotiate a price. And if it's a fair and reasonable price, then you have the proper paperwork to go through.
So Dennis, let's go to, I think we're at that stage of the program where we want to go ahead and capture some final thoughts from you folks. There's been a lot of information covered. So, is there a couple of final points you want to make and emphasize for our guest?
Your life insurance policy is truly an asset, and it is the responsibility of the persons who own that policy or control that policy to treat it as an asset, to appraise that property before you liquidate it. And the way to do that is through the life settlement professionals.
Okay. Michael, how about yourself? Any final thoughts you want to share with folks?
Well, I'd mostly echo what Dennis said. It's an asset that has a value for many Americans, particularly seniors who are in need of resources in retirement.
Mm-hmm.
It's an asset that was created through their premium payments and has oftentimes the value that's equal to or close to the equity in their own home. They just didn't know it. Mm-hmm. So learning about life settlements, whether it's them themselves or their professional advisor, should be looking at getting that value understood, and if it makes sense for that person to sell their policy, that's what they should do.
Yeah, this has been very, very, very informative. I appreciate you both taking the time to come in and talk with us and sharing all this great information. It's going to be very helpful for folks in our community, especially across Northern Virginia. So thanks again for coming in.
Thank you for having us.
You bet. Without a doubt, handling the finances for an aging adult can be challenging, and nothing can be more stressful than trying to figure out how to pay for their long-term care needs, especially when your loved one has limited resources or no long-term care insurance. Selling an old life insurance policy may help. In response to these financial needs, the life settlement industry has grown dramatically in recent years. If your loved one has a life insurance policy that is no longer needed, as many folks do, I encourage you to talk with an experienced professional about the possibility of selling that policy. No harm or cost in asking, and you may find this is an untapped resource to help with the cost of caring for your loved one during their golden years. This brings us to the conclusion of our show. We hope you found it helpful. Replays of this show and all the shows broadcast today, along with other helpful information, can be viewed on the Probate Nation website. On behalf of the Probate Nation, thank you for visiting with us.